Don't try and time the market. I'm Tim Diesel, commercial real estate consultant, and today I want to answer a question in a very unique way. So the subject matter is, don't try and time the market. And I've talked about this a few times, but unfortunately, there are many out there that are still trying to find out when the bottom is, right? Or when it's coming, when it's going to be here. Listen, it really doesn't matter. It really doesn't matter. The opportunity is always there. And what I mean by that is, depending on what you're trying to accomplish and what you're trying to do, the opportunity is always going to be there. So I want to reiterate something that I have talked about multiple times. I want you to think about this, specifically to commercial real estate in general, all right? And let's just take the average market. And let's say right now you're getting somewhere between a 6 and a 7 cap. All right. We already know the 10-year bond is close to, well, it's close to 3. It is at 3. It's been at 3 floating around, 3%. Now, imagine, if you will, that starts going up to 4 and 5%, which isn't impossible. It's been there before. And now let's take for a second the interest rate at your bank for a 5-year CD or 3-year CD or money market savings or something. They're giving you somewhere 4%, 3%. Which is not impossible. I've mentioned before, in the mid-2000s, I was getting 6%, even 7% in some places. So if that scenario is really in play here, and you have maybe a couple $100,000 to invest, maybe you have $50,000, maybe it doesn't even matter, maybe whatever you have, right? If you can get 4, 5, 6% at your bank just for leaving your money there, why would you get into real estate at these 3, 4, and 5% cap rates? Why would you buy into these apartments that are silly? Well, there's a couple of reasons, right? Some of these larger equity groups, larger hedge funds, larger money, well, their money is not insured like yours and I, and it is insured, but you're only insured up to $250,000 or whatever the case is, right? So if you're in the millions, maybe that's a totally different strategy altogether. So you have to deploy those funds somewhere. But if you're a beginning investor and you're thinking to yourself, hey, I really want to get into real estate, sure, but maybe it's not the time to get in right now, and all I really have to do is just sit around and do nothing. So really keep that in mind, because the average person doesn't like to take risks. The average person doesn't like to jump into real estate and do all this fun stuff. Yes, it's very exciting. It's very new when new investors call me all the time. And I get calls all the time. Guys, my information is really out there. It's not very hard to find me. You can send me text messages, emails. It does take me a while to get back to people now. And I'm glad to help. I want to help you guys. I'm not trying to sell you anything. I don't advertise. I don't tell you to subscribe to this channel anymore. I don't do any of that stuff. You want to like it, great. I'm here for a handful of investors that do commission me to do work for them. So this is specifically for those individuals. But if you stumble upon this channel and you do get some of the insiders' tips, that's great. I wish you use them, run with them. And if you have follow-up questions, throw it at me. Most of the time, I am getting questions like, hey, how do I take advantage of this situation or that situation? If you see new investors and they want to get into real estate, most of the time they want to get into maybe fixing and flipping, right? They want to buy a single family home, fix it up and sell it. Then you'll see, I want to buy apartments. I want to buy, 5 units or 10 or whatever the case is. Or maybe they'll hear something cool about Grant Cardone and how he's buying 300 units, how easy it is. Then they'll say, oh, I want to get into that. That's all great and well. And it's all those strategies work. Everything you hear, I'm sure there's some people out there that are getting very good results with that. But in reality, if you've never managed property before, it's not as easy as you think it is. You're not going to just get in there on a 10 or 20 unit building, do all the management yourself, and just quit your part-time job or full-time job. It's not, I wish it was, but it's not that simple. The larger the unit is, you are going to have to look into management, or that's got to be your full-time thing. You can't have a full-time job and manage 20, 30, 40 unit buildings. It's pretty tough. I mean, it can be done. It's just pretty tough in apartments, specifically apartments. Now, retail is a little bit different. You can do that because managing retail is easy. Contracts or leases are usually longer, And most of the tenants take care of the units themselves. So that's a different strategy altogether. So it really depends on what you're looking for. But if you're trying to time the market and what you should be doing, it's a whole other process. You really can't do that. And a lot of the people we hear about, and I don't want to say any names, but everyone we hear about, if you're seeing someone expose their strategy or their secrets, or maybe they have a wholesaling tip or whatever the case is, sure, it did work back then. So when they were making money doing it, they weren't giving you the insider's tips. So a lot of the strategies I used, they don't work today. They just don't, right? Banks don't take the same offers on a short sale that they did. There's no reason to. A lot of investors now, they're not going to just sell their property at a discount because they know the market's outrageous. So keep that in mind. But it doesn't necessarily mean you can't find any deals. Yes, you can. And you just have to be more selective and just have a different criteria and maybe adjust your strategy a little bit. So don't worry about timing the market. There's always deals to be had, and just keep an open mind when you're looking and you're negotiating with certain sellers, right? So I hope that video was helpful. The bottom line, I really want you guys to stop trying to time the market. We all know it's going down, and let's just not worry about when that's going to be. So what's going to happen is when the market crashes, right? So let's say the stock market is going to crash tomorrow. It doesn't mean it's going to hit the bottom tomorrow. Hitting the bottom and crashing down are two different things entirely. So the real estate market could crash. It might not hit the bottom for a couple of years. That's what happened in 2008, 2009. We didn't get to the bottom until 2011. So it does take some time for all this to play out. So even if it's crashing, you can still make money. And even if it's going up, right? You can short sell stocks. I don't know how to do that, but I know there's people that make money on the way down. You can do that in real estate. You can really take advantage of owner financing as it's going down. Even if you acquire assets as it's going down, you didn't lose any money. You're just getting into the property very light. And unless you sell and take those unrealized gains out, right? That's when you're actually taking a loss. Otherwise, you're really not. So I hope that was helpful. If you have any questions, please let me know. Thank you.